Hey there, welcome to the Stocks with Josh show. Some days in the markets are hard and some days are easy. In my view, today was an easy day in the markets, and that's because the direction was clear. The trend was established. It was bearish. Yesterday, we didn't get that tall green breakout candle that we needed to push us up over that 2022 market bear wall. Instead, we had that doji candle that we got on Tuesday, which was indecision. And then we got this, a tall, red, long candle of rejection. And so it reminds me of that scene in The Lord of the Rings when the wizard is running away from some demon creature and yells at the ugly horned devil, "Thou shalt not pass."
Go back to the shadow. You shall not pass!
So the Great Bear Barrier stands strong. The bulls have not advanced. They've fallen to the wayside. And in addition, we got this red candle, which sold off all the way into close, giving us no tail at all, which means that the bulls didn't even try to buy at the close of the day. They just surrendered. And then the number one indicator, what is that? What is the number one indicator? It's volume. You're right. This was the highest volume day in over 2 weeks, except for the one green day that kicked off the recent rally. We don't trade with our hearts, as my good friend Keenan says. We use the charts, and the chart shows us that we're getting higher volume days on the sell-off days than we're getting on the green days. Volume always tells us whether the trend is strong or weak. So where do we go from here? Don't forget, in my opinion, we're still in the same boat. January is going to remain choppy because the market is processing a ton of data, trying to figure out how exactly 2023 is going to roll out. And what that means is that bulls are going to make some money and bears are going to make some money. And the bulls and bears are both going to lose some money on some days. I think that we're going to come back and bounce off a trend line on the S&P 500 around 3850 to the 3860 range. To really lock in a bear move down, we need to close below the 3800 mark on the S&P 500. So how does this relate to the SQQQ trade? Well, I got stop lossed out on the CPI day at $45.90 range. I gave folks in the MooMoo chat my re-entry of around the $44 to the $45 range. And where did we get a bounce? We got a bounce at $44.10. If you're going to ask me in the comment section, is it time to buy the SQQQ right now? I'm going to tell you that support for that is at $45.10. The target sell range is at $51.40. And a quick reminder of what the SQQQ is. It's an inverse 3x leveraged ETF on the QQQ. And that tracks the NASDAQ, and the NASDAQ tracks big tech companies like Apple and Microsoft and Amazon. The biggest player out of all of them on the NASDAQ is Apple. They consist of 12% of the NASDAQ as a whole. And I'm going to take a quick look at the Apple chart. But before I do, I just want to thank you guys for hitting the like. Say hi in the comments, throw a heart in there. Stay close to the Stock Josh family by hitting the subscribe and the YouTube notification. Anything I say is not a suggestion for you guys to buy, sell, or hold a stock. This is for educational purposes and to help you learn how to slay the Wall Street dragon so that you can make off with its gold. Watch out for the scammers in the comment section. They use my picture, my name, and they pretend to be me, and they ask you to contact them on WhatsApp and Telegram. I'm going to touch on the Apple chart as well as my new small cap trade, WVE, and I'm going to cover some important market data as well as give you guys a brief commentary on Google and Microsoft and some crypto. Don't miss 1 second of it. I've got a good video for you today. Okay, let's take a quick look at the Apple stock's performance. And remember my premise that in my view, Apple is going to be a great indicator. It may crash the markets. I want you to check out the Apple chart and we're going to see how my favorite indicator is doing so far. The 136 to the 138 range is a horizontal line of support that has now turned resistance that we came right up against, and in this recent bull run, we got rejected at it. 125 is Apple's last stand on the bottom, on the support range. If we break below 125, I think Apple and the markets are going to fall into capitulation. The 125 to the 136 is the trade range that I believe that Apple is likely going to work in until the markets establish a longer term trend or a more decisive move, whether it's going to go bullish or bearish again. We have between now and mid-June to trade within this zone before Apple hits this descending line of resistance, which could either push us down below 125 or Apple could break out above and potentially continue on. But that's going to be a critical moment to watch, and it happens to fall into the middle of 2023, where a lot of things are going to begin to come to pass. Apple is absolutely going to affect the markets, and I'm keeping my eye on it. I suggest you guys keep it on your watch list. And more specifically, if Apple goes up, the SQQQ trade is going to go down. If Apple falls apart, then the SQQQ trade is going to shoot to the moon. That's how I'm playing it. Let's briefly touch on the WVE small cap. And I want to point out a couple key price points on the chart. Remember, this is not an investment grade stock. This is a high risk swing trade only. If you do not use a stop loss, then you might as well take your money to the casinos. WVE, Wave Life Sciences, it hit an all-time high of $56 back in 2018. And at that time, it gave the market a really strong bearish double top signal. That's a reversal signal, typically saying that the upward trend has come to an end and it's going to begin to go down. And sure enough, from that day forward, it has been in decline. It fell approximately 98% to $1.16 in May of 2022. Since then, it's been on a steady upswing, showing a great deal of relative strength and bullishness. WVE is a biotechnology company, and I'm going to tell you right now, I am not trading the fundamentals. They are not profitable. What they've got is a 50-day moving average of around $4.99 and a 200-day moving average of around $4.12. These are the two ranges that I'm currently trading, from $4.59 back up to $5.22 with a stop loss at $4.53, and then a retracement to the 200-day moving average and a bounce, hopefully, off of the 408 support with a much bigger move up to $7.34. My stop loss, if I get in at $4.12, will be $3.96, which will be a trailing stop at that point. If we don't bounce off the 408 price range, in my view, the trade is probably over. I also want to point out this very dominant green volume bar. That's pretty bullish as well. This big volume bar could be attributed to two things, that this is big buyers coming in, or it could be short covering. The current short float is 8.52%. We're hoping that it is the beginning of a new uptrend. I think that we're going to know really soon on this stock. That's the trade in a nutshell. This is a live trade for me, so I can make changes to my game plan without notice, without doing a YouTube video at any time and for any reason. This is not a recommendation for you guys. It is purely for educational purposes so that you can see how I chart a stock, how I think about a stock, where I get in and out of a stock, what type of stock to even trade. If you don't know how to use a stop loss, I would encourage you to invest in ETFs like the VOO. You will sincerely do much better. Okay, quick station break. Show some love by hitting the like and check out this offer from the MooMoo investment app. There is a link in the top pinned comment. These guys are offering 15 stock to open and fund an account. Screenshot the exact offer. It's a limited time offer so that you can be sure to get the most stock possible. I use MooMoo's free level 2 data and a stock screener to find the hot stocks. That's how I found WVE. Plus, they have the full package of order types that retail traders need to master to become better traders. This is how you lock in your profits and you protect your capital. Click the link, check them out for yourselves. If it makes sense for you, then get the free stock, start investing today, and then come find my chat group on the app called Stock Josh Fam. It is absolutely fire over there. Okay, one of the reasons we gapped down today, it's because of the initial jobless claims report. It was the lowest since September. So unlike inflation, which has been weakening, the labor market has actually been remaining strong, or at least it's been remaining tight. We know that the real indicator that's going to move the Fed is jobs. Unfortunately, he wants you unemployed. Layoffs fell by 15,000. We continue to be at pre-pandemic levels when the job market was actually strong. Corporate layoffs have not yet driven up the unemployment claims, and so we're not doing what the Fed is expecting us to do. And this leads me to believe that the Fed is going to hit the markets with that 50 basis point rate hike rather than that 25, that soft 25. And I don't think that the markets have yet priced in the 50 basis points. And so that's what I think is happening right now. We're selling off and we're pricing that in because of the new data that we got. And I think that if by February 1st, when the next rate hike is going to occur, if we got that 25 instead of 50, then the markets would rally. They're going to fall first and then they're going to do a wait and see. Okay, quick comments on big tech, Google and Microsoft. They're both facing pressure on the price of their stock because of the rise of AI, artificial intelligence. I brought this to you guys in a video recently. To remain competitive moving forward, these guys need to invest billions of dollars into radically shifting their core business to stay in the lead of their sectors, and they've got to do it by buying AI companies and investing in AI. And what's happening right now is the analysts, whose job it is to get ahead of these things and make predictions, are beginning to crunch the numbers of what that would take financially. They're reevaluating the fundamentals of the company and whether these companies are going to be able to financially maintain a moat. AI is a legit threat to the moat of their corporate castles, and in my view, it's like they have been fighting with medieval weapons and the competition has just come over the horizon with Apache helicopters. These big tech giants have to closely watch their bottom line profits all through 2023 because they need to maintain high profit margins because cash is king right now in the world of earnings. But simultaneously, they need to be figuring out how to spend money and bring in AI right now. Their businesses are going to have to completely transform to stay ahead of the competition throughout the course of 2023. I read a great article by the New York Times that reported that the buzz around ChatGPT, which was launched November 30th, triggered a code red alert over at Google internally. AI is not going to be a flash in the pan, but rather it is the future of big tech success. It's going to be a leader and an influencer as well in the crypto bull run that's up on the horizon, and specifically ETH and other layer ones. These guys are going to have AI-driven smart contracts to stay on top. Now, I've been nibbling on some AI-influenced crypto projects like Fetch, Singularity, and The Graph, but my real interest is in the micro AI coins, the ones that could 100x. I'm doing my due diligence in that space right now. I had planned to cover that in some future videos, as well as a crypto summit that I'm doing with Larry and a couple other crypto guys. I will share some more thoughts about that soon. Guys, it's a last call to hit the like. My friends, if you made it this far, I probably deserve a subscribe. Check out that MooMoo link. Come find me on the chat. Peace and blessings. We'll see you soon.